Today on the CEO Barbecue, we're looking for copper and gold in the Yukon territory together with Selkirk Copper Mines. For a bullet point summary of this and all other CEO interviews, please go to resourcetalks.com and subscribe to our free weekly newsletter. The company you're about to hear from has not paid us for the production of this interview, but this interview is still intended only for experienced speculators because this is venture capital and mining is a very risky industry where failure is the norm. All conversations that are general and impersonal in nature, and they contain forward-looking statements. I'm not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. So before continuing on, please talk to an independent investment advisor with a good long-term track record, because your capital is at risk, and also visit setterplus.ca where you'll find the company's official filings. If you're not 100% sure you understand all the biases and the disclaimers that I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said herein. That all said, Selkirk is a newly formed copper developer focused on restarting the past-producing Minto copper, gold, and silver mine in the western part of the territory, and it's about halfway between Dawson City and Whitehorse. This is a mine with a history, really. It was operated by Capstone until they walked away in 2018 after trying to sell it to Pembridge, which at the time couldn't finance the deal due to the state of the market. So the mine was actually put on care and maintenance until 2019. That's when Pembridge figured out a way to finance it. They paid up to $20 million, I believe, in stage payments. And the mine was restarted. After that, it operated through 2022. But then some issues started occurring. There was some water issues and potential risks. And an increased requirement for reclamation security from the Yukon government pushed Minto to cease operations and go into receivership, after which the Yukon government took control of the mine site to protect the environment and do some work on it. There was a lot of going to court, as you can imagine. And then in 2024, the court approved a bid to acquire the mine. Now, interestingly, that bid came from the Selkirk First Nation themselves, making Minto now the first First Nation controlled potential mining operation in Canada. There's a resource on Minto as well from April of this year, and it's showing 334 million pounds of copper, close to 190,000 ounces of gold, and 1.7 million ounces of silver in the indicated category, as well as 547 million pounds of copper, 300,000 ounces of gold, and close to 3 million ounces of silver in inferred. Historically, there's been over 300 million Canadian dollars invested in the mine, really. So in infrastructure here, that includes a 4,100 TPD crushing, milling, and flotation plant, as well as tailings and water management facilities, grid power, a 400-person camp, an airstrip, and so on and so forth, which are all in place today. Can they really all just be dusted off and used as easily is, of course, a question that I'll be asking later on. Selkirk's current work program is aimed at de-risking a potential restart, and that they talk about, not doing it slow, but taking their time and doing it carefully instead of rushing it back into production, which is why in September, they started a 50,000 meter drill program to expand and upgrade the existing mineral resource that I just told you about, while also doing trade-off studies, mine planning and engineering focused on mining, processing, water management, tailings, and waste rock, and so on. Again, all of which I can hopefully get some more color on later on in the conversation. All of that is designed to support a feasibility level restart decision that is targeted for early 2027. How are they going to find the Lassonde curve in the process, though, and how long is it actually going to take is something that I'll be asking later today as well. Selkirk is now listed as SCMI on the TSXV, where the average 10-day volume is about 260,000 shares. And I'm giving you the 10-day trading volume instead of the 3-month one, in this case specifically because the stock only started trading about a month ago, less than a month ago, on October 4. Since then, it's been as high as 75 cents and as low as 15 cents. With a market cap of just under 57 million Canadian dollars and just over 126 million shares outstanding, today this is a 45-cent stock. Moving on to the share structure, the public float is estimated at about 40% of the company, while institutions are at about 27%, and the Selkirk First Nation, they are at 22%, leaving about 10% of the company in the hands of insiders, about half of which is the CEO himself. On top of the 126 million shares outstanding, there are about 7 million warrants and just under 9 million options, bringing the number of fully diluted shares to just over 142 million, meaning an increase of almost 13% in shares outstanding could happen if all the dilutive securities get exercised, which would then result in about an 11% ownership dilution if, and that's always a big if, but if all dilutive securities get exercised. And of course, none of this accounts for potential dilution down the road, which is not unlikely, given that this is a pre-revenue company that operates in a capital-intensive industry. Talking about capital, this is where I normally dive into the company's financial statements, but since this is a relatively new company who just raised some capital, looking back might not be entirely representative. Of note, though, what I just said, they just raised capital. So they raised approximately 40 million. So that's $40 million in mid-September. So I'm assuming a good chunk of that money is still there. Is it though? And is there any debt? Where is that money going to be going? As well as how much more money will be needed between now and that targeted production decision in 2027? Those are all questions that I'll be asking later on as well. Now, for this to actually become a conversation and me starting to ask the questions, I'll have to shut up already. And Colin, I'll give you the word here. But first of all, thank you for sitting down with me today.
Antonio, it's great to be here and appreciate your background. You've really captured it well, in my view, not just the sort of current state, but what we've done most recently in terms of raising funds and sort of the near-term plan to move the thing forward into that restart decision window.
The pleasure is mine, and I am looking forward to talking about some of these things. But since this is your first time on the barbecue, the most important question first, how do you like your steak?
Well, I come from a part of Canada. We call it sort of the prairies. I grew up in Alberta, and I think if I told you anything other than rare, I'd probably get a few phone calls. So, but that is the way I like my steak. I also like a variety of meats at that level, but you do have to take care when you're cooking. You got to know what you're doing.
Well, a man of risk. I thought you would go for the safe option and be like, oh, I like it medium. That's what I get most of the time. But
I go for the tasty option.
That's well said. That's how I like it. Jokes aside, though, Colin, to set the stage here, you're launching this company exactly when it's going into, you know, what I just mentioned, the Lassonde, what the Lassonde curve would call the valley of death, or more politely, the boring engineering phase, which is usually not the best place for share price performance. How are you going to deal with that? How are you going to deal with the market sentiment in the valley of death?
Yeah, well, we've got a couple of things that we have to deal with in terms of market sentiment. We are a new issue, so we do have to get to a point where people understand the story and what we're trying to do in a disciplined way with the funds that we've just raised. So there's a couple of things that you can do during the valley of death. One is just be disciplined, be very forthright, be very transparent in terms of where we're going, where we're trying to get to, and what the key activities are. Make sure the shareholders know that we are hitting those milestones in a reasonable way. But likewise, we've got a very exciting exploration story here in front of us. Although we are focusing our drill efforts on, you know, expansion of the known zones, et cetera, there's quite a bit of exploration upside potential. And a big part of that is because this has been an underloved and underappreciated asset from a drilling and resource replacement perspective. So our 50,000 meter drill program is really going to give investors a sense of what this asset has, but also what's to come. So I do think how we communicate those results is going to be a big part of managing some of the valley of death challenge. The other one is again, just discipline, right? Be very pragmatic and thoughtful about how we approach what we do, manage the dollars well, and make sure that we're communicating against those high level milestones in a timely way.
I'll definitely be back to a lot of the points that you're making here, but because this is your first time on the barbecue, we'll still have to go through the smell test before we actually do it. Much more important when you're doing it, when you're going for rare in that case as well. But it really, this intends to understand more about what the incentives and the track record of management are. And I'll be starting off with yourself and your track record. Who are you, and have you made more money for shareholders than what you've spent during your career so far?
It's a good question. So this would be my first time as a CEO of a publicly traded company. It's not my first time in being a leadership position in a private company. But my career started as a geologist. Exploration geologist in Flin Flon, Manitoba was where I sort of first boots on the ground. And then sort of had the opportunity through that early part of my career to look through all types of mineral deposits in all types of jurisdictions, but very quickly sort of moved into the more corporate and business development role on the exploration side. Spent time in South America, lived and worked out of Santiago, Chile for a number of years. And the objective there was really to use not just the drill bit, but integrated exploration programs to add value to the overall organization. And that's really thinking about adding pounds in the ground at that time. So, I was working for a large integrated mining company called Teck Resources for the balance of my career. As I sort of progressed through my career, I got different experiences where I was able to be on what you would call sort of the front line, talking about the sale of concentrates, sale of metals, and looking for what we would consider the sort of value added options given the nature of the concentrate and the metals that we produced. My role and responsibility was largely business development, where we were really trying to take X margin concentrate and increase it by 5-10%, and sometimes quite a bit more, just on the basis of our understanding, A, of the market, but B, also the actual fundamental concentrate that we had. One of the benefits of working with Teck Resources was we were both a smelter and a miner. So we had the opportunities to think through the true commercial aspects, what drives value in the smelter, et cetera, on concentrate. But later in my career, call it from 2012 to about 2024, I was VP of Business and Corporate Development. Great question about adding value to the company. For the last sort of 7 years, I was responsible for what was known as their copper growth story or Project Satellite. And there we were taking 6 large assets throughout the Americas, Chile, Peru, Mexico, United States, and 2 in Canada, that had $0 value on the balance sheet, $0 value, sorry, on the share registry, weren't covered by analysts, weren't understood well, but were reasonably understood to be opportunities. So I was the lead on those, built those teams, helped put programs together, et cetera. And within 4 years, we secured 5 joint ventures on those assets where we brought in external money to the tune of almost $800 million over a 6-year period in the end. And we got almost $2 billion worth of market recognition on an aggregated basis across those 6 assets from zero in 2017 to 2023. So it's it's a long answer to a simple question, but the idea here is my experience really lends itself to what I would characterize is sort of the pragmatic approach to understanding the resource in the ground, developing cost-effective pathways to get it out, and ensure that our teams and our shareholders, whether they be internal, joint venture partners, or whatnot, understand what both the opportunity and the challenges are going forward. I think if I do that, I'll be well served in Selkirk Copper going forward as well.
Is there something else you're doing right now as well? Do you have any other executive or board positions with other companies?
I do. Yeah, I have one public board appointment that I received or I took up in June of 2025 with Seabridge Gold. So Seabridge Gold is a really exceptional company in my view from an exploration and resource development perspective. They control one of the largest gold resources in the world in the KSM project.
How much of your time would you say goes toward Selkirk versus what goes toward dealing with the other companies?
It's a pretty managed sort of position, at least in terms of time. I'd say it's probably less than 10% of my time is spent on board positions that I have either public or private. And really, at least in the Seabridge context, this is a well-functioning company with a good governance construct already. So you're not really working to try to create better governance. You're actually trying to support management and the team going forward in their commercial objectives.
Skin in the game, Colin, you're noted at just under 5% of the company. What's the average cost that you've paid for those shares?
So right now, I was able to participate in what was called the initial fundraising in July of this year at 28 cents, where I've received about 4.5 million shares. And then at the 56 raise, the main offering, another $1.5 million. So sorry, my math right now is about 2.2 million shares, I think. Yep. I'm at 6 million shares all in right now, and my average cost base is 31 cents.
And that's all bought and paid for, as you said, in financings. I do like that. What about the rest of the insiders? That's also about 5%. Or maybe you can talk to me kind of about the history behind the vehicle. What I care about is kind of share structure. Is there cheap paper? Who's got it? If it is, how is it managed?
Yeah, no, it's a very good question. So the shell that was used is called Venerable Ventures. It does have a little bit of a history. And that shell had a number of shares in it prior to even being conceived as a vehicle for this potential transaction. And then there was a 5 cent raise to sort of maintain the shell. And then associated with that, there was 6.5 cent options, warrants. And then there was another 16 cent raise. And that's for about 2.5 million shares in total. And the remaining shares in the shell are sort of pre-existing, so it's not really reasonable to think about what that cost base is because it's over a period of time. But that's probably the biggest unknown sort of block of shares that we have, what you would characterize as low cost paper. So I am concerned about that. I mean, at the end of the day, I would love to be able to have my hands on that and have really good certainty around all of it. On the 5.5 cent and the 16 cent shares, I know where those are at. And I know those teams, and they're generally speaking long. They're supportive of the story. They're in this for the reasons that I hope new investors are coming in, is really this growth opportunity around a new copper, gold, silver producer. So.
How much of the float here is reporting? Is what the Selkirk First Nation has? Is that reporting, and then the rest of the insiders what you have, and then everybody else, is that all reporting?
Yes, it is. So what we're trying to do is we've got obviously the directors are reporting, the officers are reporting as well, and then our senior management team. I'm encouraging them to be as transparent as they can be. We're trying to manage the number of reporters that we have. It's just a little bit cumbersome, but at the end of the day, we're going to carefully manage those sort of shares. And then obviously Selkirk with their Selkirk First Nation, my apologies, Selkirk First Nation with their large position. Their intention is to hold this long. They're very invested in this initiative. And I see no near-term or even medium and quite honestly long-term movement in that position at the moment.
What I'm really looking for, where I'm going with all this, Colin, is again trying to understand the share structure, but also trying to understand how important the financial commitment is to yourself personally. Is this a big part of your portfolio or your investments or I don't know, your life in general?
It's a substantial part. I think if you ask my wife the question, she would sort of say, within a span of a few months, you went from what some people would characterize as a reasonably safe corporate job with a large mining company and, to something that's a bit more entrepreneurial. But the reality is my career has largely been one of an entrepreneurial actor within a company with an entrepreneurial spirit. So it's a good sized position for me for sure. I haven't bet the entire farm on this, but I will say in terms of my sort of liquid assets right now, this is a substantial part.
Mm-hmm. Is this a BC farm or an Alberta farm that we are talking about here?
It's a good question. It's largely a BC farm, even though I grew up in Alberta. I left Alberta when I was sort of 16, 17. And although I go back frequently and it's where my heart is in some ways, I live in Vancouver now.
Maybe you can mediate some of those political relationships there between the two provinces. What if you think junior mining is not enough risk? No, talking about alignment, I want to know what drives the team operationally as well. So maybe you can talk to me a little bit about the KPIs or targets that determine insider compensation here, or what drives you and the team. Is it share price performance, safety metrics, economics, or something else entirely?
So we don't yet have what I would characterize a fully fleshed out sort of balanced scorecard approach to this, but there really are three sort of things that are driving me day to day and the team. So first and foremost is how we approach and manage our relationships. And this is going to sound a little bit soft, but the reality is we're working in a company that's come out of a very difficult and quite honestly terrible bankruptcy that affected many, many different companies, suppliers, et cetera, the First Nation directly. We have to present ourselves as reasonable people that are committed to the asset, but also committed to the people that we work with. It's a very hard thing to walk into a room with a key supplier that wasn't paid several $1 million and ask them to now support us in the program work we go forward. So this idea of being human and being approachable and respectable is really important to me. The second thing, and this is just human nature, we are going back into an asset that has a history in terms of just having folks walked away from the mill, walked away from the underground, et cetera. So it's a site that does have, real risks, and we just want to make sure that we're managing things well, both from an environment and from a water perspective. And then right now, in the near term, the two other things that I'm driving home to all of the executives that we have, and it's a small team, is our milestones are incredibly important. We need to make sure that we come up with reasonable milestones, but we hit those hard and we deliver against them. And the second one is being prudent with the dollars. It is a fair amount of money that we've raised. It's about 40 million plus an additional 4.5 in the two offerings from July and September of this last year. And our real responsibility there is to make sure that if we're drilling in the most effective, cost-effective way. If we're planning any sort of interventions on site where we're moving earth or we're doing some work in the mill, et cetera, we just need to make sure that we understand that it's adding value in the end. So it's a sort of 4-point sort of story. It will continue to evolve, in my view, and get a lot more specific as we move into the PEA and then we move into the feasibility in terms of what I think are key value drivers. So, but they'll probably be on those two things: milestones and prudent use of the dollar.
That's actually a good answer that I'm thinking about asking some follow-up questions on, and I will later on. But talking insiders and incentives, just moving on to the moving forward with the smell test here. Do you or anybody else directly involved in the management of the company personally own a royalty on Minto or anything else that you might be involved in?
No, none whatsoever. We have a really good, clean sheet of folks who come to the story here, right across the board in terms of our senior vice president of permitting, operations, and then our vice presidents of exploration, engineering, and corporate development. It's a very professional sort of group. There are no interests that any of us have where we could benefit some way, shape, or form by the advancement of this project, aside from in the role that we're in. There is one outstanding royalty that exists on the property. It's a historic one. It's a NSR royalty to the Selkirk First Nation. It's something that was in place from 2007 with Sherwood Copper, and it carried forward through the bankruptcy. That's the only existing encumbrance on this asset.
It's with the same group that owns, almost a quarter of the company now, though. So that does make things different.
Yeah, no, for sure. And they're also, remember, they're the landholders here. They own the lands which underlie this asset, both the physical infrastructure and the mineral resources. They have a significant vested interest and a very entrepreneurial and big risk that they've taken as a community.
Yeah. How big is the Selkirk community?
It's a modest-sized community. So it's centered in the town of Pelly Crossing, which is about 45 minutes once you cross the Yukon River and come back over onto the Klondike Highway from the mine asset itself. And that's about 3 hours north of Whitehorse on the Klondike Highway. The community itself is its own self-standing sort of community. They have gone through what's characterized as the negotiation of their lands. They settled their lands with the Canadian government in 1997. It's about 450 people, some of who are in the actual town of Pelly or the village of Pelly, and the rest are throughout the Yukon and different parts of Northwest Canada. It's a really interesting community, I must admit. I've been there now several times, and I've had the opportunity to sort of meet not just with chief and council, but also with the broader community. And, like everybody else, they want a better future, right? And they see this as one of those opportunities.
Is everybody, well, everybody's probably not realistic, but are most people in support, though, of you redeveloping the mine? Or what's kind of the sentiment in the community when you go there and talk to them, especially in light of what's happened, not only at Minto before, but also Victoria and everything else?
Yeah, no, it's a really good question. So there is, and this actually surprised me. So, and again, it's good to be surprised on the positive side every now and then. When the Selkirk Chief and First Council put this opportunity to the nation, so think of this as full democracy, right? Everybody shows up, everyone has a voice. There was uniform 100% support for the acquisition and the look at a potential restart for this asset. That is very rare. And I have to commend the nation because this hasn't been the best relationship over time. It's been a working, functional relationship, but many of the aspirations for work, career development, employment, skills acquisition that the community had through the life of the mine from 2007 to 2023 have not been realized the way that they would like. So this is an opportunity for them to sort of change their stars, I think is the phrase that's been used in the past. It's a big risk for them, but they do have very good support for it. We just recently attended. I was able to attend with our CFO, Josh Kearse, and Stacey Jones, our VP of Exploration, what's known as their annual General Assembly. And that happens once a year where the entire nation on Zoom, on Teams, but also in the room, they discuss over 3 to 4 days all of the issues that are before the nation. And we had the opportunity to be in front of them essentially for 4.5 hours, answering their questions, hearing their wants, aspirations, and desires, and their expectations. And it was a very positive sort of meeting.
Mm-hmm.
Lots to live up to, though. Lots to live up to.
Yeah, for sure. And that's actually a good segue to talk about the business strategy or the business model here, and essentially, I ask you, how do you plan on making money for shareholders, including the Selkirk First Nation, which is going to be following up on some of the answers that you gave me earlier when we talked about the Lassonde curve. But what is it that you're building for here, Colin? Is it a takeover target, or do you actually want to build and operate Minto?
Yeah, so our first objective here is to get through the restart decision, get a commercially rational and financeable restart decision with the intent of bringing the asset back into production as as Selkirk Copper. So that's our job number one. And until someone tells me otherwise, that's where we're going. And there's good reason for that. We've acquired the asset through this reverse takeover and business amalgamation process at a significant discount to its actual, what I would characterize its full value in terms of the ground. There is a positive, significant mineral resource there. It's still not in the measured category, but the indicated and inferred character of the resource and what we understand its potential to be is a very substantial start for us. It's a platform for growth. And then as we move through the engineering, the objective here is to get as cost effective as we can in that restart. So ideally, and the reason that we're sort of taking this sort of approach is we want to be in a position where we're not having to significantly dilute shareholders in that financing of the restart decision. So we've taken a very purposeful approach. It's a little bit old school, but it's worked in the past. We get a good, well-defined plan, primarily from a mining and resource perspective, get good, cost-effective, pragmatic solutions for the restart. I think we're gonna find ourselves in a spot where we're gonna be able to majority finance this thing through some sort of project facilities going forward, and then shareholders will really benefit from the re-rate.
Is it financials that are going to be because I'm hearing you mention financials a couple of times. What do you think is going to be the biggest challenge in that strategy of yours? Do you think it's going to be financials, or what do you think is the biggest risk that you're going to encounter along that process?
I think out of the three main sort of work activities and then the restart decision, the one biggest thing that's going to be a challenge in terms of our timeline is getting a fully integrated permit that wraps itself around the entire go forward plan on this asset in a way that meets our requirements and the First Nations requirements. I think the time is the issue. I don't think it's a complexity issue. I don't think it's anything more than that. But you mentioned Vic Gold. There's scrutiny here in the Yukon for doing things well and doing things right and making sure that there's good transparency for the regulator, for communities, that we've got a pragmatic plan, et cetera, going forward. So gaining that trust back that we can do that is going to be a big thing for us. I think we're well on our way. We've got great support from the First Nation. And the reality is this is not a complex asset. It's a modest size asset. It's got good infrastructure above ground. Water was an issue in the past, but I don't see that as a real concern, to tell you the truth. I think there were serious missteps by the previous operator in that regard. That should not happen with our team. So I do think that permitting piece is a big part of it. The second part, and this is more a confidence, but it's a how you present that financing plan to the market and those parties that are going to come to the table. We really have to make sure that it's a coherent, comprehensive plan that we can flex against price, et cetera, and bring confidence to those lenders that we can deliver against that plan. This is a relatively short restart. You talked about the Lassonde curve, the Valley of Death. I've lived in the Valley of Death. It's a terrible place to be. But the reality is the best way to get through that Valley of Death is just have a plan. I've said to many people over the last several months, many shareholders, right now we're planning to make a plan. So the drilling is plan one, the engineering and design work that you referred to, that's sort of plan two, integrating that with permitting plan three, and then ultimately that lends itself to a restart decision that we'll see fully described in a feasibility study. That's plan four.
Planning to make a plan. I'm going to write that down because that's what I'm going to tell my wife when she asks me to take the dishes out of the dishwasher later today. The
I've told it's measure twice, cut once. But I'm not joking. It's really important. Plan to make a plan.
No, it's true.
It's an important thing.
I agree because in the end, and a large part of this is about economics in the end, right? And the last PEA, as far as I understand it, was from 2021. It showed we've got some of the numbers here, but it showed an after-tax NPV of 288 million at 425 copper with an AISC in the $3.20 range. That's per pound of copper, of course. So those are not bad economics, even for 2021, yet the previous operators struggled significantly, again, went into receivership. What makes you confident in the economics at this point?
Well, a couple things. The previous operator, unfortunately, was in a situation where they had to rush back into production. So they didn't fully understand the opportunity, but the challenges that they had to release rock from both the underground and the planned open pits to get into a position where they could actually feed the mill, which is the cash flow engine on this asset, in a way that was sustainable. So that's why we are taking this planned approach. I think the reason that we're doing this is we need fully integrated, coherent underground and open pit mining plans that deliver in a reliable way that 4,100 tons per day to the mill, such that we can actually realize what I think are going to be significantly better economics than they've showed in that PEA. At the end of the day, that's the job, right? So we haven't made the decision yet. We haven't completed the work yet, but that's the objective. And it's really important that I sort of stress this last sort of point. This is a modest sized mine. It's not a big mine. It's a combination, almost certainly, of underground and open pit resources. Bigger mines are more forgiving. When you miss a day in a very large mine in terms of production or something didn't go well in that header, et cetera, you can actually recover because you've got big gear, you've probably got excess capital to a degree, and you've got sort of space and time. In a modest sized mine, actually getting to a point where you're really, really confident and you grill down on those execution plans, what's it going to take to keep those development headers open, flowing rock to the mill? You really have to do a very good set of plans. It doesn't mean it's impossible. There's lots of small mines that operate very well, very reliably, but you do have to emphasize the planning part of it, and that's what we're doing.
Mm-hmm. Bigger mines are more forgiving, but also more expensive to build. In your case, there's a sunk cost of over $300 million, though, and I understand what that means from a sunk cost perspective. What does it really mean for you? How much is that going to diminish your capex with? What is the capex that you might be expecting? Again, understanding that be very forward looking, but yeah, what's kind of the range here?
Yeah, this is where I get a lot of feedback from some observers around forward-looking statements. But at the end of the day, we don't yet have what I would call an estimate for that restart capital. We have a WAG. So our objective here is to leverage like the mill, the power line, the road, all the other things that a new developer or a developer that didn't have the benefit of functional infrastructure would have to invest in. So think of that as somewhere between 60 and 70% of a mine development cost. We don't have to invest that on an annual per ton basis output. So again, long answer, we're sort of hoping that we're going to be in this sort of $125 to $150 million restart. It's a guess, but if we get that at the sort of objective targets for production, which is somewhere around 30,000 tons contained copper and concentrate going forward, that puts us in a very enviable capital efficiency perspective against the industry. Think of it about something like a 15 to 25% of what other investors would have to face in terms of getting into production.
Does that also include any type of cleaning up or anything else that you might have to do? And I'm going to go on a bit of a tangent here, but I'm asking that, Colin, because water and storage were, as you mentioned, not well managed under the previous operator either. And at one point, actual water storage had to or had dropped to less than 1/3 of the license requirement. And then later, inspection in 2023 showed that there was excess water, sort of creating a risk of contaminated water being released into possibly even into Minto Creek itself, which is important because it flows into the Yukon River. And so that risk was mitigated by the Yukon government in the spring of 2023 rather quickly and so on. But dealing with that wasn't, and I assume hasn't been cheap. So are you going to have to spend any money on any type of cleaning up from that perspective?
Yeah. So what it's important that we go back a little bit just to the water. I don't want to overcomplicate it, but I think it really was a series of almost very hard to explain decisions that were made by the former management team about how they were moving water on site between the different storage facilities. But suffice it to say, they made a mistake. And that it did lead ultimately to the government coming in and taking over the site. But what happened in that 2023 early sort of May sort of period when the government did come back, they effectively put the site into closure, and they started affecting the closure plan. And so that required them to actually do a lot of above ground work, very significant investment in capital, drawing down on a bond that was posted by the prior operators. And that's cleaned up the site significantly, both in terms of any earthworks that we have to do to manage the old waste rock dumps, et cetera. And it's put those waste rock dumps into a really good position from a contact water perspective going forward. So there's been, in our understanding, around $45 million of that bond has been spent by the government over the last 2 years to manage a lot of those former environmental liabilities. So the surface site today is fantastic. Like when you go there, and you'll see some pictures maybe at some point in time, you can really see well contoured rock dumps that are essentially in final closure. That limits or reduces our active contact water budget. That now is clean water essentially that can be moved off the site directly. That reduces our overall investment requirements for managing water going forward, but it also reduces our obligations or requirements around treatment of that water. Mm-hmm. So that's a great investment that we benefited from. And quite honestly, shareholders have benefited from. Should we make that restart decision, that significantly lowered that hurdle. I think the other thing, though, as we think about water more in general, this is really about getting past concepts. This is getting to measurements and models that are real. And we're working through that right now with some of the best in the business with the appointment of SRK and Hatch Engineering in our trade-off studies. So that's a key focus of the work that we have going forward. I'm very comfortable that this site can have its water managed well. Like even when you look back over history, it's a really good story, to tell you the truth. It's just this one point in time where the freeboard got a little bit too high. And again, I can't explain why they didn't just pump that into the other storage area.
Mm. Well, who decides who pays what? Like, do you talk to government directly, or who decides that?
So the Selkirk First Nation, through the bankruptcy, negotiated a very substantive and thoughtful thing called a framework agreement, anticipating this restart. So they did a couple of things. When they negotiated with the government, they said, look, we want to be able to take the tangible assets and take the resources and use those to inform a restart decision. And sort of what I would characterize as maybe the less tangible being the closure obligations and some of the care and maintenance work. They effectively negotiated with the government and said, for care and maintenance, because we're still in this state of closure and there's this, unknown in the valley of death, if that's the right phrase, is that the government would pay for the care and maintenance costs of the facilities until April of 2026. It's only 5 months away, but that's good for us because that allows us, A, to plan into that responsibility, but it defers those costs. Again, remember, prudent use of dollars. They also negotiated an arrangement with the government where they would be responsible for the cost of water treatment and discharge until April 2027. And again, there's two good reasons for that. One, that allows us to get a good plan in place, really understand what the water challenges may be. But again, it allows us to defer those costs. And then the last thing is they negotiated an arrangement whereby Selkirk Copper, until it makes that restart decision, does not have to bring back the full closure and reclamation obligations that are remaining on the site. We only do that when we've got a clear sense of the economics and an ability to finance both the restart, but also be able to post those bonds appropriately. Mm-hmm. So, and that's a 5-year option, by the way. So even if, let's say, we're a little bit delayed in the restart decision, we have to do a little bit more work to just make sure that we satisfy lender requirements or the certainty of the execution of that restart decision. That gives us a little bit of time. So they've done a very, very good job negotiating a framework agreement that benefits us so we make the best possible economic decision going forward.
I'm again thinking about incentives in this case. Show me the incentives and I'll show you the outcome type of thing. And that actually reminds me of what about the Selkirk First Nation from the perspective of if there's a conflict between maximizing shareholder value or doing what's right by the share price or doing what's right by the community, which are not always the same thing. They should often be, but they're not always the same thing. Who decides what choice you go for, and yeah, what happens if there's a disagreement between you and the First Nations?
Yeah, I think we could spend an entire hour trying to unpack what you just said. I'm not convinced actually that by making a decision that respects air, water quality and the quality of life in Pelly runs contrary in any way to maximizing shareholder return. I would actually argue the opposite. I
Well, the
think
only
it's
way it could be,
easy.
and I'm sorry for interrupting here, Colin, but
Yeah,
what I'm thinking about, kind of to explain my thinking there, is timing again, because
yeah.
sometimes you need more and more and more and more studies, and as cliche as it is, time is money in junior mining, because more time means you spending more money and needing more dilution later down the road. So that's really where I'm coming from.
Okay, okay, fair
Most of the
enough.
times, yes, what you want or what the First Nations want is going to be aligned with what is good for the stock price, but not always, and particularly when it comes down to timing, it's not always aligned.
Well, heavy wears the crown, right? Or what's the phrase? I mean, I think that's the challenge, right? We have to work through this in the best way possible. When I say plan to make a plan, it is what we're doing. But I don't see this as overly complicated. I think remember, we've got an existing flow sheet. We don't have to design that. We're not designing complex engineering structures, et cetera, for waste or rock management. We're not intervening with heavy capital. What we're doing is we're trying to figure out those things that make the highest return possible for the shareholders in the shortest amount of time is really what we're doing. The Selkirk First Nation are clearly understanding that time is part of the challenge as well. They're probably pushing us as hard on a restart decision as anybody else. So there is an objective requirement in the framework agreement to give line of sight to the government and the Selkirk First Nation by the end of 2026. Are we really going into a restart? We don't have to make the decision, but we have to very strongly signal to them that all of the stars are lining up. This is where we're going. They're not, alleviating that obligation. It's not what I would characterize as a strict hard milestone. It's more indicative, but it's probably one of the more important ones that we're driving to. So they're not taking the pedal off the gas at the moment. They're saying, get the work done, make sure that we're informed, substantiate the work in the restart, and do your best to get us in a position so that can be as economic a restart as we can get.
Yeah.
Sorry, Antonio. I guarantee there will come a time where we'll have a conversation and there will be disagreement at the board and probably in management, but that's part of life. That's the way this works. I'd rather have the disagreement because it'll create alignment and it'll create clarity as to where we're going. And quite honestly, that's exactly what the First Nation wants. They want it. They've said to me, we want to move out of the back of the pickup truck into the cab. We want to be on the other side of the wall, so we're there where decisions can be made, so we can feel the weight of some of those decisions as well.
There's a board seat, I believe, though, for the Selkirk First Nations, if I'm not mistaken.
There are two appointees by the Selkirk First Nation for their shareholding, and they do have a right to appoint a third board member as they see fit through the fullness of time. And what I can say right now is I'm ecstatic. I'm ecstatic with the board appointees that they have. Both very professional, very experienced individuals. They didn't pull any punches. They brought the best that they could to the table.
Mm-hmm. To your point of timing, though, Colin, it's not, unfortunately, mining is not as simple as you walk into the office one morning and then you get a checklist and you're like, okay, got to complete this by February and this by April or whatever it might be. But if you were to speak to someone with about a 75 IQ, that being myself, how would you explain to me what has to happen between now and you actually taking that decision in 2027? What's the checklist that you have to complete?
We need a more fully described resource. We need a integrated mine plan. And then we need a costing study for the development cost estimates. And then probably the most important thing is we need an execution plan. And people talk about this in the industry, ops readiness, right? This great phrase, operations readiness. Essentially, that's making sure that you understand I've got dirty plates, I've got a sink, I got hot water, I got cold water. Where's the soap? Where's the cloth? How do I do it? I don't want to minimize the complexities of this, but the reality is you need the three ingredients at the start, and then you need that operations plan. And that's why we brought guys like Chuck Hennessy to bear. This is one of the more senior operators in Canadian mining over the last number of decades. He's led many turnarounds in terms of existing operations, but also restarts at small, medium, and large mines. That's the whole focus of his work over this next little while, is to make sure that we're ready so that when we decide to pull the trigger, that this thing actually happens.
In terms of plan of operations, you said this would be a combination, or most probably would be a combination of underground and open pit mining. What are the ground conditions where you are in the Yukon? Is there any permafrost that you're dealing with at depth? Any ice blockages or anything like that?
So we do have surface permafrost conditions across the site. Generally, the northern facing slopes are permafrost bearing. Those have been mapped out in quite a bit of detail by past operators. It's actually one of the key learnings of this operation in the past is try to avoid placing waste and tailings physically on top of permafrost. So that's something that they've already learned through. We have the benefit of knowing where that is. There is no deep sort of penetrating permafrost here. Geotechnical ground conditions are very good. This is largely a granitoid hosted sort of rock complex. If you go back over time and you look at the various pits as well as the underground conditions, very good back, very good overall ground stability. So we don't see that as a significant risk in any of the work that we're doing. We'll obviously have to pay attention to it and make sure that we've got the right plans in place. I think the bigger geotechnical challenges going forward is making sure that where we place the waste rock and where we place and how we place the tailings is done in such a way that it's meets ICCM sort of standards, is geotechnically not just responsible but conservative, and it's something that we can stand on.
What are those standards, and are they going to be different for you within that combination of open pit and underground? Like, really, what I'm asking about here is permitting. What kind of permits do you need before you can actually turn on the mine?
So I think the permits it's pretty interesting. We have existing permits and authorizations. What we don't have is we don't have permits and authorizations for a 12 to 15-year mine life that brings material from an underground and an open pit at the same time and allows for the placement of waste, mainly rock waste, not so much tailings, but rock waste. So there's a thing here called the Quartz mining license, and that's the primary permit and authorization that allows us to work within a defined area that's around the pit. Right now, our objective is to fit that 12 to 15-year development plan. And again, that's a bit aspirational, but that's where we're trying to get to. That 12 to 15-year plan inside that QML. So we don't have to do any new environmental baseline or any new studies. We're just working on the existing environmental baseline. So that's job number one. And so far, it looks like that's doable. The second thing that we have to do is we have to update the understanding around the water licenses. And there's two types of water licenses here. One is directly tied to the QML, and the other one is a sort of broader, more area-based sort of water license. And those two things, they're a little bit historic. In my view, we just need to get them updated with the best information that we have. And there's tons of information here. It's just getting it integrated in a way that makes people comfortable that you can manage it. And then the last sort of permits and authorizations that we need, what I would call the overarching ones, are exploration permits. So we have two mechanisms by which we can carry out exploration. One's called a Class 4 license. We have that. We have a number of meters that are still and a number of drill pads that are still in front of us for the current program. But then we also have authorizations under the actual QML, this other license, the Quartz mining license, that allows us also to carry out additional exploration, resource definition, et cetera. So those all need to get stitched together, but they all exist. They just need to line up. Mm-hmm. And then I think that the other thing is there's several sectoral permits, like any operation, any planned sort of physical works. So we do need construction permits. We do need sort of execution permits, but those are much more linear. They're relatively like 2 to 6 week authorizations.
I was in the Yukon this summer myself, and I spoke to some of the government officials, and one of my takeaways was that it almost felt like they might be getting overworked just because of how much activity there is and potentially slowing things down in terms of permits. So where I'm going with this is how long do you think it's going to take to get those? Essentially, it's kind of like three big groups of permits that you're talking about here. Is there a timeline on any of those?
We're working through the timeline right now. The benefit of having existing authorizations and permits is we're not starting from ground zero. So if we stay within the quartz mining license in terms of its physical limits, we don't have to go back and do fundamental baseline and go through that multi-year review sort of process. So what we're seeking is an update and amendment to those existing permits and authorizations that allows us to move a volume of rock and a volume of waste in a responsible way. So that's what we're doing. We're not trying to say, hey, let's go apply for brand new permits and start the process overall again. So that reduces the burden on the government. It actually increases the burden on us because then we have to put forth really comprehensive plans so they fully understand it. We will have to go through some public consultation, which again, I welcome. That's the sort of stuff that should be done. And that's not just with the Selkirk First Nation, but that's broader community in the Yukon. And in my view, look, we've got a really good platform to go from. I just don't want people to think, though, that this is a slam dunk. The last operator thought that they had the permits in place. They thought that they had the authorizations to move the waste, to move the ore the way that they thought they did. And the reality is they did not. So I'm not going into this without knowing and without having 100% certainty, because once we get that, I know the team can deliver. I have no doubt that we've got the skills and the competencies and we can bring the operators back to this asset to do it well. But I'm not interested in having a two-step restart.
Yeah. Fully permitted, famous last words. That's definitely true in our space. Where did concentrate go through, by the way, just maybe as an in-between, I'll go back to the point here, but when they were putting out concentrate, where did it go through? How was it transported?
Yeah, so there's a significant sort of choke point in the Canadian Northwest. It's called Skagway. Mm-hmm. So the Port of Skagway has been a long operating port. It's a substantial facility, lots of cruise traffic. There is, both industrial materials going in and out. And historically, there was concentrate shipment from a number of operations in the Yukon. There came a time, though, where those weren't being managed environmentally the way that the port wanted. So the city, the borough of Skagway and the port of Skagway actually put a moratorium on the transshipment of concentrates for a number of years. They've lifted that recently, and they're now looking at different options to manage, critical mineral export from the Yukon, northern BC, even parts of Alaska through the port of Skagway. So that's opened up again. We've had the opportunity to meet with the Port of Skagway director now monthly for the last 4 months. We're continuing those sort of discussions. There's a genuine alignment, it feels like, between the different governance groups in the US and in Canada to make sure that that port can service mineral concentrate export going forward. We have a bit of a bespoke sort of solution for ourselves, so that we're contemplating. We don't need to do a full recapitalization of a plant. We're a modest sized mine. We're going to figure out how to do what's either rotainers or containerized bulk bag sort of shipment that minimizes sort of disruption in the port and utilizes existing dock facilities, et cetera, in a way that makes sense. And so far, we don't have a firm plan in front of them, but they're open to the discussion. We've actually had the chance to take the port operators and the port directors to some port facilities in the lower mainland of British Columbia and show them containerized delivery of concentrate onto a ship, minimal sort of fugitive dust, actually no fugitive dust, really good operation. So they're very leaning in, if that's the right phrase, and we just need to take advantage of that and do our best to get a solution in place over the next 2 years.
So why this matters to me, Colin, is thinking about delays in timing and things that could make the process more difficult and therefore slower, essentially. Going back to that cliche again, time is money. So I want to know how resilient your plan is to slippage in timing and everything, right? From exploration, or really from where we are now to actually shipping concentrate. So how do you think about, again, timeline risk and how you manage that?
So the dollars that we've raised right now were intended to get us to that restart decision in early 2027. And that's with a focused sort of drill program, the sort of 50,000 meters that we're talking about. And then the engineering, the permitting, the care and maintenance costs, and that sort of design work, if you want to call it that leads us to the feasibility study and then that restart. If we have significant delay to that restart decision, we will have to come back to the market and raise additional dollars for the fundamental work. The time is everything. You're not wrong. So, I mean, that's why we have the management team that we have in place. In spite of what some people say, we can, as an industry, do things quickly and we can do them well, but we do need to be coordinated and we need to be sort of thumb on the pulse and make sure that we're moving through the things. I'll give you a simple example. So when we onboarded the engineers and awarded the contracts to Hatch and SRK, there was a conversation about, oh, well, should we go to site or could we put this off to a later date? No, we said, no, look, it's the shoulder season. We got to get to the site. We got to have people boots on the ground, see what's happening on the ground. We took 12 engineers up there. We did it right at the shoulder season when the barge was being shut down. We made sure that we had the flights available to get us there. The important thing is we could have taken 2 weeks. We could have taken 3. We didn't. We know that time's important. These people have to have grounded experience to do the work that we want. And then subsequent to that, we now have 5 weekly meetings on the engineering side that are all hands on deck, showing progress against things that we want to see happen, because we need this trade-off study to be completed as soon as possible, call it early in 2027, so that we can feed that into the feasibility study. Again, my point is time is important, but we recognize it. So that's why we're doing the work the way we're doing. Same thing. We could have deferred the start of the exploration drilling program until we completed the second offering and financing. We didn't. Part of the reason to do the initial offering was to make sure that we took advantage of the early part of the drill season, that we could mobilize drills onto property. So all of that was at-risk financing with the objective intent of getting the work done early and quickly. We now have 4 drills turning on the property. It's going to be the biggest exploration and drill program in terms of meters in the Yukon this calendar year, or like in the fullness of the time from when we start to when we finish. And that's not going to happen without respecting time and money. So we did that. We did that with the full understanding that if the main offering didn't come off and the deal didn't go, I would have been out half of that financing. And that's part of life. That's what entrepreneurs do. That's how we're thinking about this. So I want shareholders to ask me the question going forward: are you spending the money prudently? Are you doing it so that you're managing time and minimizing our dilution and risk on the back end? So there's a couple other levers around dilution and around the sort of managing the shareholder returns going forward that we still have to our advantage. And that, should we need them, we'll pull those triggers.
I do want to know what that is, and I'll get to it, as well as I want to know what you're doing with the drilling as well, and what you're spending money on there. But essentially what I'm getting from you here, Colin, is no raise before we know if this could be a profitable mining operation.
So what I did say, I said outside of exploration, that's a broader sort of piece here. So the $40 million gets us to that restart decision. The other sort of key economic sort of tenet here and value proposition of this group going forward is what I would characterize as exploration. So we have a very small 3x3 kilometer footprint that we're working on, and that's the focus of our efforts. If we're able to put in place exploration arrangements and agreements in the early part of the new year, I would look to go to the market at an increased valuation. So we're not really taking heavy dilution, but to raise flow through dollars for additional exploration, because again, you go back to 2013, previous operators stopped drilling, stopped replacing resources. There was only a burst of activity in 2021, 2022. This asset works when you drill it. It doesn't work when you don't. So we got to be mindful of that. That may be a raise that we do in the new year.
You're going to be drilling, or you are drilling actually, through winter in the Yukon, which is not easy, and therefore it's not cheap. How did you make that decision? It's always a trade-off. I mean, I suppose you drill anywhere, anytime, almost, but you made that decision that it's worth the risk, the reward, and the cost benefit. Why is it worth the increased cost? I mean, how much are you paying per meter, and why is that worth it?
So I think we probably would not have made that decision if we didn't have the camp facilities and the infrastructure in place. So road access to basically all of the platforms that we're looking to target were in place. We have very modest road building to get to all our pads and target areas. The camp and facility itself, it's a big deal. We don't have to pay for facilities. We don't have to pay for, camp and importing all of the attendant sort of gear and equipment. It's already there. So you've already reduced your sort of what I would call sort of G&A or overhead for execution of a drill program. And then the fact that we could get the drills to the site. Again, sometimes you just have to get them there, and then once they're there, they become a bit more operationally efficient. So if we were running just one drill, it'd probably be an overall higher support cost per meter. Two drills last, three drills last 4 years. So there's some economies of scale of running the four drills. As far as winter operations go, again, because we have the facilities in place, if there's cold weather issues with some of the equipment, we actually have a work bay that we can take equipment into. We can manage it there. We're not doing open air sort of repairs. So again, a little bit more efficient, less costly. At the end of the day, sort of we targeted in the sort of $235 to $265 all in per meter costs. Right now, it looks like we're at the top end of that, but that's still very cost efficient. So I'm still comfortable with the decision to go in and drill these meters early. We'll see at the end what those numbers actually look like, but so far so good.
What is it that you're drilling specifically in terms of zones where what did you say, 4 rigs?
Yeah, there's 4 rigs turning. Yeah.
Where are they now?
So, sorry, what was that?
Where are they now?
So we've got 5 main sort of target areas on the current footprint, that 3 kilometer by 3 kilometer area within the QML. So Minto North, there's drills turning there. Minto East, which is a target on obviously the eastern part of the property, a little bit deeper, well-known zone there with good grade. We've got the ridge top, which is a potential surface zone. And then we've got 118, which is an extension of that zone to the north. And then we have the copper keel zone. So those are the 5 areas that we're sort of working on. There is a 6th, and it's a broad sort of category area. It's what I would call more true exploration. It's where we have indications of mineralization, either in one drill hole or an adjacency and a coincident geophysical anomaly. So there are a few targets that I would characterize as unnamed zones, but they're exploration within the footprint.
Okay. What percentage are you targeting for conversion of what you have right now?
Yeah, so we've kind of got 3 basic sort of elements to the program. So a third is what I would call sort of expansion and definition of the zone. So the limits of the zone, not really infill, but trying to expand the zone sufficiently so we can get that 12 to 15 year mine life sort of resource potential. So that's not what I would call conversion to measured. That really is sort of expanding the known zones. That's about 30% of the budget. Another 30%, again, roughly, is where we are doing infill for both open targets. So it won't be a conversion, but it's where there's a spatial gap in the drilling and you're trying to identify additional volume within a known zone. And that's largely the ridgetop area. And then the other third is what I would call sort of that exploration side, right? Because we're not exploring 10 kilometers away from the site yet. We're exploring on the site where the previous operator had significant intercepts. A good one is called in the DEF zone. Mm-hmm. There was I think as my recollection goes, it's 4 meters of 12% or 4 meters of 10% copper in a zone that was previously undrilled. That's the sort of target, that's 200 meters from a road that we really need to make sure that we understand that could be part of this plan going forward. So that's the balance right now. We will have some conversion of indicated into measured by the end of this program. But, in the fullness of time, we'll then have a better idea as to where we go. We do have dollars in that 40 million that will be deployed to that, but we need to know where it goes before we put it there. The 50,000 won't get us to fully measured.
What kind of efficiencies are you getting in terms of drilling? Again, thinking about timeline and how quickly that program is going to be done.
Drilling's going great. I must admit, I'm quite surprised. 4 rigs, we're averaging about 100 meters a day per rig. So that's going to get us to, even though we had a staggered start, like we did quickly, we moved quickly, but Stacey Jones and myself and the team, we said, look, we're not drilling this safely. I can't get the phone call at night. I'm too old. It makes me cry. I'm not interested in people, losing a finger or getting injured or not being able to come back to work next day. So safety first. Second thing, though, we need to make sure that we're managing the water and the environmental impact. So we did a slow startup, made sure the first rig, the systems and procedures are in place, but we've ramped up pretty quickly from them. And now the productivity is exceptional. We expect to be around 34,000 meters by the time we shut down for the Christmas break. So that's really good productivity. And then we'll pick up the drilling again in the new year once we get the ice bridge back in place on the river.
So drillers get like $250,000 a year and Christmas break. That's actually a pretty good deal.
Jokes aside, I don't know where the $250,000 came from, but whatever.
I heard it on a drill site actually this year in BC. And jokes aside, there's absolutely no way I could do what a driller does. So they should be getting more than that, and twice a year Christmas if it was up to me. So.
Look, they work hard, and you know what? These men and women are smart. Like I grew up, I was a driller when I was a younger fellow, working both oil and gas and then in the exploration industry. It's they care a lot about their teams, they care about what they're doing, and they are very, very good. Like when you've got someone who's listening to a drill bit at the bottom of a 400-meter drill stem, and he or she knows that drill needs to be changed. Like that's not luck, right? That's skill, that's experience. These are good folks.
These are absolutely hard jobs too. I mean, they do 12-hour shifts as well. Yeah. No, it's really, really rough.
35, 40 below. It's just like a walk in the park.
Yeah, exactly. What is is size really going to be part of the decision making is what I've written down here. Thinking about, is there like a break-even size where you're like, this got to be at least 1.5 million ounces of gold, and then the copper on top of it and everything else before I'll actually move it forward? Is that going to be part of the decision?
I mean, it always features in the decision. What's an economic and sustainable plan, right? 5 years is not going to cut it, I don't think. I've been very clear that we're targeting 12 to 15. I like 15. It's a nice round number, 5 plus 5 plus 5. 15 does a couple of things. It allows us to get a different conversation with the permitting agency, the regulators. It demands that we have a plan to get there. It also changes the nature of the conversation with the First Nation. It moves more into the sustainable, early multi-generational sort of thinking about an asset that generates benefits and wealth. But really importantly, 15 years for a base metal operation like this changes the nature of the conversation with the lenders. So once you kind of get into that past the sort of 7 to 10 range, you can now talk about 3 or 4 metal price cycles. Like in the current world, it's probably 12 metal price cycles. But the reality is, if you think about the longer term trend for copper as a cyclical sort of commodity, if you can get 15 years, you're almost for sure guaranteed 2 long cycles, if not 3. And then that's great, right? That gives the investor and the company and the stakeholders the opportunity to have sort of outsized returns during those run-ups. I personally think that the copper space is a little different right now, that we've sort of maybe broken out of those cycles a little bit differently just because the challenges the industry faces in terms of delivering copper year in, year out against the growth profile in the industry. But nonetheless, that 15-year changes the conversation dramatically. Size is a part of it. Right now, as you indicated at the beginning of the program, we've got indicated and inferred mineral. And again, I've got to be careful about trying to combine it, but I'm a bit of an optimist. I come from the land of geology, so I have to think this way a little bit. Our job is to further define those resources and convert that which we can into mine plans. If we have no further exploration success and we convert 50% of the indicated and inferred into a set of mine plans, that gets us 12 years. If we get 60%, that gets us 15. So we're already got good indications that we're expanding a couple of the zones that we've drilled early here. So I'm comfortable we'll expand the mineral resource. But again, size will dictate a little bit more about expansion potential or the long-term sort of life. I think we're not trying to get a 2x here in the first little bit. We're just trying to get the 1x. We get the 1x, we deliver against that, then we have real opportunity, in my view, with some additional mineral added to it to go forward. Now, flip your hat to the exploration side. There has not been sort of what I would characterize as modern integrated exploration on this district for probably 20, 25 years, if not longer. And as you know, geology does not respect claim boundaries. It's sort of funny. It's a bit fickle. It goes where it wants to go. We've got extensions of very permissive on-strike geology here to the north, to the south, and then we have down dip that hasn't been tested to the east. And partly, some of that is our own claims that we control, but others are lands that are controlled by the First Nations. They're called Category A lands. And those lands have not been explored for a long time because the First Nation was never comfortable with the partner, with their approach to land, air, water sustainability, but also just simple respect. So I think we've got a different opportunity here now. That changes the nature of this beast. This will be the first time that two things happen on this property. The owner operator owns all the copper, gold, and silver. We've extinguished the previous streaming arrangements on gold and silver. It's a huge financial switch for this asset going forward. And then the second is we now have this opportunity to think about exploration as true explorationists. It's very exciting. It's not common in my career where I've been able to go into a belt or an area where you've got potentially 40 to 50 and maybe even longer kilometers of strike that you can go and spend good dollars with good expectations of discovery. That just doesn't happen. This is exciting.
But from the currently ongoing 50,000 meters, that's all infill. So that's not going to include step out then in that case.
No, there are step outs to the zones. So the existing zones, we are definitely doing step outs. So we're doing 65, 100, and 135 meter step outs to existing zones to expand the size of those zones. That's basically where you say, here's a lens that we know, and it just hasn't been closed off either on the left or the right. So as you look to the northern end of the existing property, there's a zone called Minto North. We have two new discovered zones. One's called the East Lens, and the second is called the West. I think it'll be called the West Zone and the East Zone. But anyhow, those haven't been fully defined and drilled off. That right there, those two lenses, is almost 2 years of production just from two lenses. And we're expanding those with the drilling that we're doing right now. So there is a bit of expansion for sure.
Yeah. Come time for you to potentially raise capital again, and if you get the permits right and the agreement with the communities, and then you do actually do more exploratory work here, where is that money going to come from? And what I'm thinking about here is it just going to be straight equity at first, or do you think you might bring in a strategic partner or anything else like that?
Yeah, so right now, I'd sort of say there's two real options on the board. There is the possibility for a strategic partner. I'd say that's lower down on the list. I do think we're in a value position here where I'd rather have a bit more definition around what the real potential is, get a little bit of smoke and fire that helps create some leverage in those conversations with a potential strategic. But there's a different source of financing that sort of takes the pressure a little bit off the equity. It's less around the exploration side. It's more around the restart. And it's because we extinguished the concentrate offtake arrangement with Sumitomo as part of the prior operatorship. So we now own that and control that. And to me, that's a really significant source of non-dilutive financing, mainly for the restart. We could use it potentially for exploration though as well.
Okay. And when do you think that might happen? What I'm thinking about here is, would you think you're going to have any news from the currently ongoing drilling before you have to do that, or how do you see it in terms of, yeah?
No, good point. So we're just coming out with the very first assays and release on the initial drill program. My expectation, it could be later this week, but it's probably going to be early next week because it's Thanksgiving in the U.S. But good indication so far that program, which was focused on the Minto Northwest zone, hit mineralization, good visible indications of mineralization. We're just getting the assays compiled. So that's first bit of news. I expect there will be another bit of news again on another batch of drill programs or drill results as they come in just before Christmas. And then I think there'll be 3 more in the new year. So sort of think of them every 3 to 4 weeks, depending on the nature of the assay returns. And then that will then sort of all flow into the story. And hopefully that gives us a little bit of indication for, investors that are coming back to essentially a story with a bit of a difficult history, right? There's not a clean sheet for us here. We have to recognize that. We have to earn our stripes. So these drill results will be important. It will show A, that our thinking is right, B, that the potential is there and that there's a pathway forward.
Are there results going to be important for you as well from the perspective of better understanding the geology, either
Oh, yeah.
continuity or orientation or geometry or something else that might keep you up at night?
It's so again, it's a bit dangerous being a geologist, but some people call me an engineer, metallurgist, and just a generally helpful fellow. But aside from that, I think the geoscience potential in this resource here going forward for exploration and for better production plans and whatnot is incredibly high. That there's never a bad thing having grade working for you. The prior operators really did a good job to the extent that they tried to define enough reserves and resources to get the mine plans that they had. Unfortunately, stopped investing in it. But the grade was such that they really didn't have to understand the geology. They really didn't have to think about geometallurgy. They didn't have to think about structure too much. It's just because the grade was there and it was potty. Remember, these lenses tend to be about 100 meters wide, 400 meters long, and up to 35 meters thick, around 1 to 1.5% copper. And very commonly, they have a higher grade core that's somewhere between 5 to 6 meters thick, up to 10% copper. So they really just ran this thing off of grade shells, just which is fine. That's how they did it. But they didn't really integrate the geoscience thinking that allows you to then extend your ideas outside into areas where you have less information, less ground truthing, if you want to call it, and you really have to use your geoscientific skills to get there. So that's one part. The second part, though, is geometallurgy. These minerals, they tend to liberate quite well. It's coarse grain. We get a good concentrate recovery, but nobody has focused on maximizing precious metals recovery because the stream paid them all away, right? So there was no real benefit for the operator to recover more gold. Sounds strange, but they didn't. When you get a little bit better geoscience thinking, that allows you to refine how you put material through the mill, how you process it, and then how you recover it. Simple example, if there's lots of free gold, we'll probably restart the Nelson concentrator. If we find that most of the gold is entrained in the bornite, we probably won't. But we need to go through that, make sure we have a good understanding. And then all of a sudden, we're recovering gold at a far lower cost. At $4,000 gold, someone might tell me that's a good idea. And, you really do benefit. So I'm not trying to over science this or over pointy head this idea. The reality is there are some good things that we can do right now, and I'm seeing it right now. Really good structural work for the first time, giving us a better sense of targeting. We've even had, geoscientists come back to us. We get these daily reports. Man, they're excited and they're like, this is where the next drill goes because it's an open area. We just hit 5 meters of mineralization that we didn't know was there. That's where we're going next, and it's geoscience driven, not just grade.
That's how I understood that streams, by the way, are not a good thing because they make you not want precious metals. Because like if you have a stream and someone's like, "Hey, do you want some more gold?" and you're like, "No, I don't think so," and that's how you know it's not the right thing. But actually, talking about that, you do have silver, which is not overly important in terms of economics. Do you ever consider selling a stream on it?
I'm never say never, but right now I think it's so incredibly important that we've removed the financial obligations from this asset and from these mineral resources. It would probably be the last thing that I would do.
Yeah, that's well said, and that is the right answer. What do you think? What do you think is going to happen to your G&A in the meantime? Again, I didn't get to look at any of the previous financials because they maybe wouldn't be
They don't
too
really make
relevant.
much
So,
sense.
how much money do you want to spend on G&A? Maybe a rough, like, kind of monthly estimate.
So I would like to spend less, but in all honesty, you need to pay people to get the work done. So right now, our sort of budget, and this was early days. These budgets were put together quite a while back. We're just going through an update and a refinement of them. We were looking at the care and maintenance, which again is a little bit G&A related because it's so people intensive, as well as our sort of corporate G&A including marketing and whatnot, around $12 to $14 million for the full 18 months. So that would have been an 18-month sort of spend. Right now, we're spending a little bit less than that. We're not doing the care and maintenance costs, and we haven't been able to bring on sort of the engineering resources that we want integrated into the team yet. So we're a little bit light on our G&A so far. Ideally, we're able to defer some of those costs. That's why we get the engineers to do these sort of fixed contract sort of works on the study costs, where we can really control those costs and we don't have to bring on a full complement of engineers, et cetera, into the core team. But right now, I'm looking to keep it below 750 grand a month.
Okay, 750 a month. Does that include marketing?
That's in terms of the corporate G&A sort of level.
That includes marketing and everything else?
No, that's just the people side. Sorry, the marketing would be on top of that. Yeah.
So in total, what, about $1 million, or how much are you looking to spend?
I think it's going to end up somewhere between 1.2 and 1.4.
Okay. What are you doing for marketing? Because that does sound like, I suppose it's not only marketing. The addition, you said 1.2 to 1.4, so that's like $500,000, 750 on top of the people thing. That's not only marketing, I don't assume. But how much are you spending on marketing, and what is it going to be buying you?
Yeah, so this is a little bit new for me, so I must admit this is an area that I'm learning about. What couple of things that we're doing? We recognize that this issue is coming out of two basic things. One, nobody knows about it. I mean, you just got to get out there and talk about it. But they also are hesitant to come back into this story because of its history. So what we're trying to do is a couple things. We've got three sort of core elements. We're reaching out to folks like yourself. We're trying to take advantage of people who are in the industry, who are connected with folks who believe in the critical mineral story, that believe that there are assets that deserve to come out of the ground and that there are management teams that can do it. So we're trying to make sure that those connections are live. We're spending time doing interviews like this to tell the story, the philosophy, the backdrop. We've got about 5 of those on the go already. So that's sort of core to it. And then we're trying to augment that with obviously our communications plans around the milestones. So marketing is about tangible results. It's about delivering against what we say and doing it in a way that, demystifies it for the investors. So drill results first. Obviously, we've got some announcements around management that we'll add to the team. Like I was sort of saying, sort of augmenting the team going forward a little bit. But again, some key things around permitting that will come here in the new year. And then my hope is a couple things that relate to the mineral resource update, which we expect to be in March of this year. That'll be a continuation of the work that was done and released earlier last year. And then we move into the preliminary economic assessment, which we hope to get out in mid Q2, and then we start feasibility. So again, just communicating the plan, the milestones that we're hitting them, and being transparent about what we're learning. And then lastly, when we think about groups like yourselves in terms of marketing and other groups that are out there managing the information so it gets to the point of transaction for people who are interested in the space, as you're probably well aware, there's lots of different programs that are helping us get sound bites, drips, trips, whatever the phrase is, in front of investors so they realize this may be one of very few stories that could see new copper production coming to market by 2028. I think you'll be able to count those on one hand if you go globally about truly new production. And I'm not going to, couch it in any other terms. We are advantaged by the existing infrastructure and investment, but the reality is it's new copper. And that's going to be rare in this space. And it's in a market that's undersupplied and continually stressed from existing producers. So, this to me, that's the marketing. That's where we're trying to get to. There's some technical aspects to it, but we do need to invest, and we hope we're investing for the shareholders' benefit.
And you being new to marketing and doing this, now you know how emotionally taxing it is to talk to me for almost an hour and a half here at this point.
This is fun, by the way. I could talk to you for hours. A, you're a good interviewer, but B, this is the story. I love this. I'm a student of the industry. I love everything about this industry.
I appreciate your kind words there. I hope we can do more of these conversations in the future. I'm sure there's a lot that I'm missing here to ask you in kind of the first pass conversation, but I'm sure that people listening who might have questions that will let me know, and then I'll ask you next time. What's the most fair criticism that you've gotten of Selkirk since you've been talking about? Again, I met you in Zurich, so I know you talked to a lot of people there. What's the most fair criticism people are giving you?
Well, I think there's two things. This is an asset with a history. What are we going to do differently? The past operators, nobody gets into a situation where they want things to go poorly. That's not the way the world works. I know that. So what are we doing differently? Partly we're learning from the past. we are recognizing that you need to be at the asset to make good decisions. I'm here in Vancouver, but I've now been to site 9 times in the last 3 months. I'm going again here in a week, and then I'm going again right before Christmas. The idea is not that I can make all those decisions, but I need to show respect for the asset. I need to show respect for the team so they're motivated to make good decisions. They surface good information for us as quickly as we can. And you sort of set the tone of respect with the First Nation. That's game number one, right? Let's just be human and get this done well and be responsible. I think the other fair criticism is prove us on cost and resources going forward. Like we don't have a PEA yet. I don't have an economic assessment. So they're going to say, I'm a bit from Iowa. I'll see it when I believe it, right? Or I'll believe it when I see it. So I do think that that's a fair criticism, but that's the job of management. That's our job. So we need to come up with these plans and make sure that they're credible. And if they fall short, then we have to have plans to figure out how to augment them, right?
Well, and again, hopefully I'll be following along with that process and getting updates from you along the way. What's your most fair criticism of me, Colin? What do you wish I would have asked that I'm forgetting to ask here?
I think you asked one thing, and it's not just the valley of death sort of piece. It's when I think of the challenges of seeing these things through, I call it path to value. You need to vision the sort of path to value, and you have to sort of see these roadblocks. I call them value impediments. Our job is to remove the impediments. It's A, to recognize them, then remove the impediments in a reasonable way, and then move forward, et cetera. I think there are multiple impediments to any redevelopment story. I might suggest that when you ask the questions forward, just don't stop asking the questions. And the reason is, sometimes it's geology, sometimes it's metallurgy, sometimes it's people. So getting people to come back to this asset and work well with the First Nation respectfully. And then I think that, the last question I would probably ask a little bit harder is, where is the government? Not in terms of, do they want it to happen? You talked about resourcing, et cetera. There's a new government in the Yukon. It's a pro-development government. It's very exciting. They are reaching out to us. We are reaching out to them. But the track record here is not great in the Yukon, in my view. I think mining has got a bit of a black eye over the last number of years, and we need to earn our way out of it. So I would probably encourage you to continue to ask those questions of me, because I think then they get filtered back into the industry and they get filtered back to the government, and the government will listen and they will hear about it. And hopefully that helps us all get on the same page.
Yeah. That's a great way to end the conversation. And it gives me a lot of food for thought for our next conversation. But for now, thank you so much for sitting down with me.
Antonio, I appreciate it. 90 minutes, you win.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there, so it is safer for you anytime you're watching any type of company-specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias, again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Oh, so unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."